Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of March 10th through March 14th. We're in part one of our weekly trading game plan. We'll try to help you survive and make money trading during the March madness in the markets. So let's get started. Welcome, Fairchild. Thank you for joining us in the chat today. Hope you had a great trading week and are doing well. So here's our Google document with our notes for part one of our weekly trading game plan from March 10th through March 14th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our notes documents contain links to bonus videos, to the tools and resources we use to do our market analysis, come up with our trading strategies, trade ideas for this trading week. You can find a direct link to this Google document in the description box below. We keep all our weekly trading game plan notes documents in a publicly accessible Google Drive folder, so you can refer back to the notes for this week as well as previous weekly trading game plan notes documents. And you can also find a direct link to this publicly accessible Google Drive folder in the description box below. Welcome, Gerald Fitz, the Ricky Khan. Thank you for joining us. Hope you had a great trading week and are doing well. So firstly, we'll take a look at how the markets ended up on Friday. So we can see it's pretty volatile. Again, March Madness, a pretty volatile day, a lot of oscillation, although the Dow did end up up 0.52%, NASDAQ up 0.7%, S&P up 0.55%. Again, a lot of oscillation, a lot of volatility in the market. I guess there was some sector rotation by some large money managers that some are attributing that initial drop, particularly in tech, and then that rotation back up. So we see we had 62% advancing, 34% declining, only 29% new highs, 71% new lows. Now only got 35% above their 50-day moving average, about 65% below. And we've only got 43% above their 200-day, 57% below. So although this is showing bullish, again, pretty volatile, pretty oscillations. See mixture with the Mag 7. Some of the Mag 7s were green, Apple, Nvidia, Google, some red, Meta, Microsoft, Amazon, Tesla, Lilly as well. So again, a distribution among the Mag 7, maybe some rotation just among the Mag 7s, some profit taking out of some, rotation into others. So we'll see if that trend continues. Most other sectors mixed as well. Get some of the news. The real estate agents haven't had a lot of impact on home buying. Most Americans can't afford life anymore, but they don't matter to the economy like they once did. Misfiring Wall Street wealth machine. So again, sector rotation by some large money managers into auto tech, into defensive. Dow S&P trim losses to end a tough week. S&P closes higher in volatile trading Friday, worst week since September. Welcome to Crow, MD. Thank you all for joining us today. See, oil is broken down below 70. It did test the /CL WTI future, did test its 52-week low, rebounded off that 50, 65, 66 level. We'll see if it breaks down further. Natural gas, again, long-term uptrend, we'll see a lot of volatility, but it's testing its recent high around 445, 4.45 or so. Gold broken down a little bit from that 3,000 level, hovering in the 29s, 2,900 to 2,950. Right now, all the futures are pointing up. Bitcoin did have a significant drop, then a slight bounce on the Federal Reserve, Bitcoin Reserve, and also the Crypto Summit. It does look like it's rolling back over and headed back down again. Yields had dropped quite a bit, bounced back up on Friday. So now we've got the 30-year back at 4.6, 10-year at 4.3, 5-year at about 4.1. So we did have a retraction of yields, but then again, a bounce back on Friday. Welcome, Kayton. Thank you for joining us. Hope you had a good and safe trip. Love to hear more about what's going on in Brazil. So now we'll look at a breakdown of the major indices and the technology components. And just a quick reminder, you can see these screeners in our notes documents and also in the screener sheet of our ETFs and Watchlist Google Sheets. Look at a breakdown of, let's look at the major indices first. So again, we see the Dow declined off that double top, coming down to that 420 support level. Probably get good support there. You've also got the 200-day moving average about at that level, so that'll probably be a pretty strong support level for the Dow. But again, a little bit of downside, got a resistance from that lower trend line. So again, probably see some bouncing off that support level for the Dow. Russell, again, going to be the weakest of all of them. It didn't quite touch its August low yet, so more potential downside in the Russell down to 200, down to that August low. SPY in general, you can see it's getting support from that lower trend line, oscillating around the 200-day. It did break its November low, the pre-election low, not quite down to its September low, so it does break that trend line. Now it's potentially get resistance from the 200-day. So again, more potential downside, but a lot of choppiness. You can see a lot of choppiness in the SPY. NASDAQ broke down below its 200-day, so now you got resistance from that 200-day. Again, it's very close to its November low, pre-election low, and then again, more downside if it breaks that down to the September low. So again, potential resistance with the 200-day and some significant downside potential. If we look at the technology components, FANGs, you can see this is quite interesting. They're getting a lot of support from their 200-day moving average, possibly an algo bounce off these 200 days. So it's pretty interesting trading opportunity. If the algos are going to continue to bounce it off that 200-day, but again, significant potential downside to the pre-election lows in the FANG stocks. ARC's just oscillating along that lower trend line, getting some support from the 200-day, but just chopping around those trend lines right now. Again, more potential downside in ARC down to the pre-election low. Semiconductors broke down below that multiple bottom. That'll now provide resistance. So we'll probably get a bounce up into that now resistance level, some support at 20. Significantly below the 50-day and 200-day moving averages. Biotech, again, resistance from that lower trend line, significantly below its 50-day. Again, choppy, but more significant downside. You can see it's the lowest, probably a 52-day low or 52-week low. TQ is just leveraged on the NASDAQ. So again, we see more potential downside, significantly below its 50-day. So this is showing us more weakness in broader technology. Also TECL, the broad technology, significant drop, more potential downside to 60. So again, a lot of weakness in the technology sector all along. Welcome, Aura Alpha. Thank you for joining us. Hope you had a great trading week and are doing well. So next we'll look at a breakdown of the groups and the sectors and the industries in FinBiz. Grab a quick drink. Okay, we look at a breakdown of the group sectors and industries in FinViz. See a somewhat defensive rotation. We see tech did rebound on Friday. So again, rotation slightly back into tech on Friday. We'll see that. But otherwise, generally a defensive stance on Friday. The weakest financials, consumer defensives. Looks like financials are rolling over, profit taking in financials. For the week, however, basic materials and healthcare, the only positives. Even the defensive sectors were negative, so that's a downward pressure on the overall market. Weakest energy, technology, consumer cyclical, again, Mag 7s, and again, we see that rollover in financials. For the March Madness so far, again, very defensive stance, consumer defenses, real estate, healthcare, and healthcare even slightly negative. So again, real estate benefiting from lower yields, but otherwise very defensive stance. Worst technology, consumer cyclicals, again, heavily weighted to the Mag 7. Energy also weak on oil weakness. We look at a breakdown of the industries. See a little bounce back in oil, pharmaceuticals on Friday, kind of a mixture, semiconductors slightly rebounding, office REITs, mortgage REITs, some oil, so a little bit of a rebound in oil. Gold slightly positive, a little rebound in gold. Silver, same. Copper, looks like it peaked out on Friday. Uranium slightly negative. Coal, pretty negative. Both coking coal and thermal coal, pretty negative. Discount stores, very negative. Luxury goods, we got a mixture. Retailers not doing well now. For the week, silver and gold were strong. Utilities, metals, all very strong. So basic materials, steel, copper. REIT split, biotech negative, some REITs negative, retail, semiconductors very negative, uranium very negative. We'll be looking at some of the uranium ETFs in particular. Luxury goods, utilities, renewables, so clean energy very negative. So far from March, got a mixture, some defensives positive, basic materials positive, some REITs positive, gold slightly positive, some REITs negative, oil generally negative, solar very negative. Again, coal been very negative, so we're looking for opportunities in those areas, coal, uranium. I hope that helps. Next, we'll look at the economic data from last week, talk about the upcoming economic data for next week. Grab a quick drink. Just as a quick reminder, as the important economic data comes out, important economic news, I try to capture that and post it in the Surf the Markets channel of our Discord as quickly as possible. Our Discord is free to join. You can find a free invite in the description box below. So as you see, as the important economic data comes out, try to capture a screenshot of that, the raw data from investing.com. Also important economic news. So our Discord's a great source for real-time economic data and economic news. Also, we have all kinds of channels where you can discuss trading of different asset classes using different trading styles, different trading platforms. So again, we'd love to have you join our free Discord, actively participate. Again, a great source for help from your fellow BeachBum traders, as well as real-time economic news. Not a whole lot Monday through Wednesday. Thursday, this was interesting. We're going to have a lot of discussion and focus on the job market. See, the job cuts was over 100% year on year, much higher than previous in February. So this shows that companies are paring back jobs. So they're cutting jobs. I've also seen them closing opening jobs, and we'll see next week we've got JOLTS, and that will be interesting to see if the gap between job seekers and open jobs has closed significantly. Also got the weekly jobless claims data and continuing claims up more than expected, although initial claims was not as high as expected. So people are having a more difficult time finding jobs. Again, jobs have been cut. Productivity better than expected. Labor costs did drop, so less inflationary pressure due to the jobs market. And Friday, we got non-farm payrolls. So it was lower than expected, so less jobs than expected getting created, although more in manufacturing. Government payrolls dropped. Average hourly earnings dropped a little bit year on year, flat month on month. Hours dropped a little bit. Participation dropped a little bit. Private non-farm payrolls less than expected. So again, private sector also dropping jobs. The unemployment rate bounced up to 4.1, where it had been flat at 4.0. So we're seeing a slow deterioration in the job market. Again, the Doge cuts starting possibly to show up, probably more in private contractors, etc. Not so much in government payrolls, although we are seeing some drop there as well. Again, also the U6 really bounced up to 8%. So again, we're seeing a slow deterioration in the job market. We'll see if that, I don't think that's significant enough to cause the Fed to cut anytime soon, but I guess the market priced in sooner cuts and more cuts for this year. We'll see again next week. Got some important data from both a jobs market standpoint and particularly inflation. So as we'll see Tuesday, we've got JOLTS. Again, we'll see if that narrowed the gap between open jobs and job seekers. I expect that to narrow. Wednesday, so we got a lot of volatile data coming out to keep feeding the March madness in the markets. So we've got CPI on Wednesday, PPI on Thursday, and then we've got Michigan sentiment, and all of those potentially causing significant volatility in the market. Inflation has been sticky, and if we don't, in my humble opinion, if we don't see further progress on inflation towards the Fed's 2% goal, I don't think they're going to cut anytime soon. And I don't think the deterioration in the job market right now is significant. And I think they're going to save their ammunition for later in the year when we see the federal employees that are on severance roll off. Could be not until October. So again, in my humble opinion, I think the Fed's going to save their ammunition till late in the year. Again, if this inflation data comes out higher than expected, or the Michigan consumer, if the consumer sees inflation continuing to be sticky going up, very negative for the market. So again, more madness to come, more potential downside if this data disappoints. So we'll look at the rest of the data from last week and on any additional data for next week. Welcome to Crow if I missed you earlier. Thank you for joining us. Hope you had a great trading week and are doing well. So it looks like my filter got set to all countries. So let me reset that. Sorry for the delay. Like I said, it looks like my investing.com filter got reset. As you can see, you can choose economic events from all kinds of different countries in investing.com, and I only want US. Okay, hopefully that's fixed now. So again, you can see if you did want to see economic data from a particular country, you can select that in the filters in investing.com, and then you can see the economic data both from the past week and for the upcoming week in investing.com. So Monday, we also got ISM manufacturing, again, kind of a mixture. So PMI manufacturing global went up a little bit, construction spending down more than expected. Manufacturing PMI for February dropped was less than expected, but still over 50, so not contractionary at this point. Bond yields up a little weakness in bond auctions. Car sales, not too bad. People probably buying cars before the tariffs hit and the prices go up. Crude oil stock down, but less than expected. Mortgage rates continue to drop, now at 6.73, so that's positive for the housing market. ADP, another kind of a shock to the employment market. ADP non-farm employment significantly less, about half of what was expected, and significantly dropped below previous. So again, showing deterioration, tightening in the job market, fewer new jobs. ISM non-manufacturing dropped a little bit. PMI for the February, better than expected. Prices up a little bit, though. There's talk about front-loading buying before the tariffs hit. Crude oil inventories up significantly, so again, prices dropped. Talked about challenger job cuts and weekly jobless data. Natural gas storage dropped, but less than expected. Again, natural gas prices up in the fours now. Talked about non-farm payrolls. Rig count is pretty steady, 592. Total rig count for oil rigs, yeah, steady at 486. Total, one drop. Consumer credit up significantly. Let's check the economic data for next week. Some bond auctions. Again, JOLTS on Tuesday will be the important economic data. Little small business optimism, but not a major effect. Crude oil stocks, see if mortgage rates continue to decline. OPEC had reported that they're planning to go ahead with their April production increase. So another reason for oil prices to drop. See if they back off of that, if oil prices continue to drop. And then we get CPI data. Again, if this comes out hotter than expected, it's expected to come down a little bit. If it doesn't, again, negative for the markets. Real earnings. Thursday, again, weekly jobless claims data and PPI data. Expected to drop a little bit month on month. If it doesn't, if inflation's sticky, again, chances of a rate cut will get pushed out. Again, potentially negative for the market. And Friday, we get inflation expectations, consumer sentiment. Again, last time inflation was higher than expected. Again, negative for the market. We'll see if sentiment continues to deteriorate, if inflation expectations continue to be high. Again, could be negative for the market as well. Should be pretty much done with this earnings season, but there might be a few that might be of consequence that might impact. There's Oracle on Monday, so we'll see if they are negative. HPE had very negative earnings, so They are exposed also to data centers as well, enterprise software selling, so that might have a negative impact on technology if they miss or report poor guidance. So listen for Oracle for the tech sector. And you can go through the list, see if there's anything else that might affect your trading. Sympathy plays, again, if Oracle reports poor cloud sales, poor data center projections, then that could hit the other cloud providers as well as the data center providers. Got some biotechs, quite a few biotechs. So again, you can go through the whole list, see if there's anything else that will impact your trading. But again, most of the majors have probably already reported, got some more retail. So retail guidance been poor going forward, Stitch Fix, etc., Groupon. So I hope that all helps. And we don't have our next FOMC meeting till March 18th, 19th. So probably next week we'll look at the probabilities for rate cut, rate hike. There's even talk about a potential rate hike, a small probability of that. Again, in my humble opinion, I don't think they'll hike. I think they'll just hold. But we'll look at that again next week. We'll also get a SEP, a dot plot at that March 19th announcement, and we'll see if they've changed their trajectory for rate cuts from the last SEP we got, which was back in December. So again, you can hear how we trade around earnings via the link to the video in our notes. So let me grab a drink and we'll look at the market screen in Webull. So some interesting data there. Just a quick reminder, if you're not already using Webull, you can still get 20 free fractional shares of stock by opening and funding your account with as little as $500. Each of these fractional shares worth $3,000 to $3,000. So if you're not already using Webull, if you use our affiliate link in the description box below, you can get your free fractional shares of stock. Also take advantage of any other promotions they're offering at this time, and also help support our BeachBum trading community, which we greatly appreciate. I'm using the market screen of the online browser version of Webull. So we can see in the histogram, pretty split on Friday, pretty volatile, percentages increasing and decreasing, pretty balanced. Numbers of increasing and decreasing pretty balanced, so pretty flat in general. It's interesting, we got a reversal. We had an inflow early on, then it went negative on the NASDAQ, and then rebounded towards the end of the day. So again, positive inflow back into the NASDAQ, into technology towards the end of the day. So could bode a positive going into Monday. NYSE, though, just steadily down, outflow out of the NYSE. So non-characteristic of Fridays. Usually we see NASDAQ down, NYSE up. So it's pretty significant reversal and might indicate a sector rotation, again, back into technology. Market sentiment, again, is now in extreme fear, down at 11. The gauge is showing 13, was at 18. And again, we were only in fear a month or so ago. It's interesting too, as we are now at the lowest point for the year. So we are now in the highest fear rating, lowest positive greed rating for the year. So again, The market sentiment is showing extreme fear, but the indices haven't really capitulated, as we'll see. And we didn't see, extreme downside in the markets other than, a day or so we had some significant drops. So a lot of fear out there. Might see some, quick panic selling. So watch for that. That's the retail traders generally. Again, you can see the near-term earnings calendar and the calendar widget in Webull. Go to next week and go day by day, see who's got upcoming earnings, see their estimates, etc. There's Oracle again. Let's look at the best performing industries for the week. So looks like, again, pretty defensive. Utilities got some positive on government, but those are probably European. We'll talk about European defense and stock, ETFs, etc. Metals and mining pretty positive. Healthcare actually mostly negative. Most other sectors pretty split. Defensives, consumer defensives positive. Renewables negative. Home building pretty split. On other materials, potential impact of tariffs, probably impacting a lot of these materials, chemicals, etc. Fintech negative. Transports negative, so that's a negative economic indicator. Transports are negative, tends to be negative for the market, for the economy. Welcome, Gerald Fitz. If I missed you earlier, good to see you. Hope you're doing well. So if we look at the most popular ETFs, it's got up on the Dow right now. Looks like up on mid caps, some rotation into mid caps. Positive on the NASDAQ right now. Up on the VIX, although we'll see down on Bitcoin. So that's a leverage short on Bitcoin. Actually short on the VIX, so retracement of the VIX. Up on small caps. So again, somebody's looking for a bounce in small caps. They got beaten down pretty significantly. Industrials pretty positive. Healthcare, financial split, utilities positive. Energy, looking for a rebound in energy. Again, real estate recovering, lower bond yields, lower mortgage rates. So get a rebound in real estate. Positive in technology. So again, we might be seeing this rotation back into technology. Basic materials pretty strong. And again, very defensive. Commodities, that's sustainable, that's oil tankers. And oil tankers, natural gas. High yield. Okay, let's also look at the futures. And just a quick reminder, you can trade 24 hours a day, 5 days a week in Webull, overnight trading in Webull, and you can get more information on overnight trading in Webull via the link to our video and also the posting in our Discord. You can also trade futures in Webull as well, and there's some opportunities in futures that we don't have ETFs for, so you can also take advantage of those using Webull's futures trading. You can find more details about Webull futures trading via the link to our topic in our Discord. We look at futures as well. See those steep declines in all the markets. Again, the Dow's above its lowest point for 2025. So more potential downside down to that 4,200. S&Ps down at the lowest point in 2025. Same with the NASDAQ, although it looks like it's bouncing off of that 2000 level. Don't see a real strong capitulation. So again, although we see the high extreme fear rating, we just haven't really seen a real capitulation like we saw a capitulation in early, it was probably January, and then a quick rebound. So a lot of people will probably be sitting on the sidelines waiting for that capitulatory bottom to indicate a reversal and trend back up to get somewhat of a doji on the S&P on Friday. Russell again very weak, downtrending. Nikkei rolled over, trending down, yen up. European stocks, and again, we'll focus on some of these European stocks. Europe and DAX have been very strong. So change of guard in Germany, change in policies. German bonds hit a high yield since the 1990s or something. Euro stocks look like it's chopping around a top. So if you think that's going to roll over, we do have a short, but there is a significant more potential upside in the Euro stocks as well. Also want to look at the VIX. We see it finally popped up above the previous high. Didn't quite make 24, but it is holding above 20 now. Let's look at the term structure in the VIX. So again, you can find the link to the term structure tool for the VIX on the link section of our homepage, beachbumtrading.com, bum without the U. We go down to the reference links, find the VIX term structure. See right now, VIX pretty high, 23. See right now, we've got a backwardation in March, April, etc. going out. So a near-term volatility higher than longer-term volatility, but the whole curve is now above 20. So, and VIX from historical standpoints isn't at an extreme high. So again, we're set up for a potential significant pop in the VIX if any of that inflation data comes out poor, or if we get further shocks from tariffs, we could see a significant pop in the VIX. Let's look at the near-term data. We see it was significantly higher, but the term structure is above that. So again, we've got the potential for a significantly higher pop in the VIX. So again, oil broke down below 70. Like I said, it did touch its /CL touched its 52-week low. USO though, the one we're watching, hasn't hit its 52-week low yet. So potential more downside in oil. Again, OPEC's talking about increasing production in April. And natural gas, long-term uptrend. And it's still got significant potential upside. Some resistance at 450, so it'll probably chop until it breaks that. We'll see how it tends to trail down and then pop. So again, very volatile, but long-term trend still significantly up. Again, gold broke down slightly below 2,900, regained that 2,900, got resistance in the 2,950 or so. So probably more oscillation in that range. Silver got pretty good support at 32, got resistance at 33. Looks like it rolled over, so it might come back down and retest 32. Copper peaked out just above 480, rolled over. Pretty good support at 460. Agriculture up. Corn down. So China also announced tariffs on U.S. Agricultural products, soybeans, corn, wheat, etc. So we saw a significant drop in those products, although not as dramatic in soybeans as I would have expected. Wheat did got its support level at 450 or at 540. It's not quite at its 52-week low, so we'll see if it goes down and tests that. If so, we'll see if that's an opportunity to go long wheat, although again, China tariffs negatively impact the grains in the U.S. Positive are countries like Brazil. They'll probably turn to Brazil to get their grains. Again, just a reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and hopefully some entertainment purposes only. Sugar came down finally. Coffee chopping around the top. Again, we had seen strong uptrend in bonds last week. See a slight retracement back down. So bond yields bounced up a little bit. Pretty good support at that previous top. So we'll see if we get a loop back up in bond prices. Further decrease in bond yields. Had pretty extreme moves in the short end of the curve last week. So again, getting some correction at that level. See if the 5-year goes down to fill that gap. Again, big gap in the 2-year. So if it doesn't go down to fill that gap, we might see another gap up. See the huge run up in the euro. So again, euro strength, quick pop. Congratulations to any of our BeachBum traders who caught that run up in the euro. Quick dive in the dollar. So the dollar is significantly weaker, down under 104. Yen, though, didn't really spike up yet. Also interesting, even though the on again, off again tariffs with Canada and Mexico. Last time, initially, we saw that big drop in the CAD. See, it didn't drop quite as much and then recovered more quickly. So not as much of a panic in the CAD. Swiss franc up. Aussie and New Zealand dollars just kind of oscillating. Pound up. So again, plenty of opportunities with these on again, off again tariffs with this March Madness, and plenty of opportunities to make money trading. Again, some opportunities trading some of the futures we don't have ETFs for, like orange juice, although it's still, even though the big decline, if you think that's going to swing back up, trade futures in orange juice. So I hope that all helps. Okay, just very quickly, we'll jump to our theme and then we'll come back and talk about ETFs, because most of our discussion, I think most of the opportunities will be in our discussion about ETFs. Let me grab a quick drink and we'll go through all that. So our theme for this week, again, is how to make money trading, how to survive in the March Madness in the markets. And actually last week, and we talked about making money trading in March and how March tends to be a positive month. However, we might not see a market bottom until sometime in March. So again, I expect we'll see some continued March Madness in the markets, also due to tariffs and other volatility in the government. So you can hear our previous discussions about how to make money trading tariffs, how to make money trading Trump 2.0, how to use ETFs to trade these themes, etc. We have the links in the related videos. We have those videos in the notes document as well as the description to this video. So again, just as a starting point for making money trading the March Madness in the markets, highly recommend you look at those related videos. Again, those themes, trading tariffs, trading Trump 2.0 are all the ways you can make money trading the March Madness in the market. Again, I put the link to last week's part 1 weekly trading game plan, where we also discussed all of those. Also got several other videos about how to make money trading in March, how March typically performs, best performing sectors and industries in March. Also, we're wrapping up the winter, so then we'll flip over to the spring. Just a quick reminder while I'm thinking about it is tonight is daylight savings, so don't forget to bring forward, move your clocks forward tonight, or you might miss our part 2 tomorrow. We don't want that. So a lot of discussion around tariffs. Again, we've been talking about tariffs, how to make money trading tariffs for quite some time. And a lot of people are starting to catch on to what we've been discussing all the way back to previous to the elections. International markets are probably where the opportunities are going to be, particularly around tariffs. So I want to kind of focus on some of the opportunities in international markets. And we use our ETFs Google Sheet as we identify an opportunity, be it in a commodity, index, theme, etc., country, individual stocks. We have all these ETFs, be it a long or short idea. We can then jump to our ETF Google Sheet, find an ETF to trade those trade ideas. And you can do likewise, get 24/7 access to our ETFs Google Sheet by joining our Patreon. So again, I want to look at other ways that we can find opportunities in international markets, take advantage of these tariff opportunities. So we've done several videos in the past on how you can find stocks by country using the FinViz country setting, also the country exposure tool, and the ETF database. So I put links to those previous videos in the notes so you can refer in more detail to those. But I wanted to show you how we can use each of those and see where there might be opportunities in some of these international markets. And we saw Europe's run up, the DAX has run up. So firstly, again, I put a direct link to the selection in the group sector, select US or country, US listed only. We can see a subset of the markets, international markets. So we could see on Friday, South Africa ran up. There was some discussion, Trump discussion with South Africa. We've got a lot of European markets. We've also got Argentina bounced up, Brazil up, South Korea bounced back up. See, the U.S. is actually, significantly below a lot of these international markets. That's why, again, in my humble opinion, some of the trading opportunity going forward is going to be in international markets. Japan slightly positive. Singapore very negative. Hong Kong, Australia negative. That's interesting. Germany, slight correction. Mexico has been very volatile. Again, these on again, off again tariffs in Mexico for the week against South Africa. And several weeks ago, we added an ETF to our research sheet for South Africa that you can find. So hopefully some took advantage of that. Again, a lot of China rebounding, swinging back up. Again, we're long yen. You can trade China with yin and yang ETFs. You can find those in our ETFs Google Sheet, as well as several others, thematics on healthcare, etc. So if you think some of those other sectors might be lagging and swing back up in China, take advantage of those again in our ETFs Google Sheet, in the research sheet. So again, as you find any of these countries, you want to look for ETFs on whatever theme, and search the main page and or the research page. So again, you can find some others: China healthcare, got China tech. So again, if we do a top-down analysis, find a country, then we can go find ETFs with a particular theme. South Korea bounced back, again Brazil swung back up, Mexico, USC down near the bottom, Malaysia very negative. So I'm wondering what caused that. They're getting some data center funding in Malaysia. So if anybody knows the reason for the big drop in Malaysia this week, be interested to know. Maybe that's an opportunity. Play the rebound in Malaysia. A couple weeks ago, again, we added some ETFs on Malaysia to our research sheet, so that might be an opportunity. So again, I'm going to be more focused on looking at countries and these markets in other countries, see where there might be opportunities. India's been slowly coming down. See, there's Malaysia, it's at 23. Still got a little bit of downside, not a whole lot of risk reward profile there. And again, we highlighted that a couple weeks ago. So again, Europe strong for the month, Mexico rebounding, and Malaysia very negative, India pretty negative. So again, that might be a future opportunity. We have a number of ETFs also on India. You can take a look at those. We've highlighted those in the past. Got some in the main sheet, some in our research sheet. Also wanted to revisit very quickly how to use the ETF country exposure tool. So again, we have a whole video in more detail on how you can use the ETF database country exposure tool. But again, if you have a particular country, if we think like we recently talked about Thailand. So if you're looking for ETFs with exposure to Thailand, talked about that. SoftBank is investing in data centers in Thailand. So one way is to click on the country in the map, and then you can see more Thailand ETFs. There's THD, the one we highlighted previously. See, here's a Southeast Asia ETF, emerging markets. So some of these we already have in our ETFs Google Sheet. See their expense ratio, the weighting of Thailand in that particular ETF. So again, another way to find ETFs to trade a country. Again, we don't have all of these. If you think some of these are particularly interesting, please let us know. We can always add them to our ETFs Google Sheet as well. You can also see the whole list of countries, see how many ETFs have exposure to that country. So look at Malaysia, I think there's quite a few. I think there's only one. We highlighted EWM. We have that in our ETFs Google Sheet. So again, different ways you can find ETFs and explore those with exposure to a particular country that you might think would benefit from tariffs or the backlash from tariffs, like China moving their trade to countries like Brazil or possibly some others due to the tariffs on grain from the US. A couple other quick things I wanted to highlight is how you can use the global indices in investing.com to see the performance of different global markets. You go to, I didn't put a direct link there, so if you go to markets in investing.com, go to indices, go to global indices, See all countries, major indices. Go to performance, so they're closed right now, so no data right now. But if we go to performance, not sure why that's not filling in. There we go. So you can also sort by the day, so we can see the worst performers for the day. We can see the best performers. Go to the week. So Turkey, probably Indonesia. Go to the month, year to date. So worst, India, Indonesia, Japan. Sort by best, Colombia, China, Spain. So again, another way you can see how those markets are performing, right? And we see the stocks, etc. So we can find markets that are underperforming, outperforming, and then we can go look for ETFs that potentially might benefit, that we could trade those markets long or short. So again, I just wanted to show you another way we can track performance of the global markets, look for opportunities to long or short those global markets, again, using ETFs. So finally today, also wanted to show you, you can search for emerging markets in FinViz. So if I just put emerging in the search bar in FinViz, and I open everything up that shows up there in the screener, and then I pick the industry of ETFs, exchange traded funds, if I can find it. So here's all the ETFs that are related to emerging markets. So we have a number of these in our ETFs Google Sheet, but as you can see, there's 133 ETFs related to emerging markets. So you can evaluate those using the various settings in FinViz, so compare their current performance, etc. Look at the charts. Again, we have a number of ETFs you can trade emerging markets long or short in our main ETFs page, as well as some additional ones um, in our research sheet as well. So these are the ones we found before, done analysis on. You can see their risk reward profiles. So again, if you think would be sector rotation into international markets in a particular country or emerging markets, I think the opportunities there, find an ETF to trade those long or short using our ETF Google Sheet. So I'd love to hear your feedback on which countries, if you think emerging markets is the place to be, particular countries, again, long or short. I see Easy Mike, Katon's asking about EWG. Let's look at EWG. So that's a German, and no, I do not have a short ETF to short Germany, but EWG, we do have that, I believe, in our research sheet. So we only have EWG, long, Germany, have a couple on the DAX. I think that's the only one. It is shortable. So if you can short in your account and you feel that the DAX has peaked out, you could short EWG. So I hope that all helps. So very quickly, I wanted to just point out, we're out of time for today, but I did add some that I think are very interesting, and you can explore these in more detail in our ETFs Google Sheet. And then hopefully in the near future, we'll highlight these, do a deeper analysis on these ETFs, as well as we've got a growing list of ones we haven't gotten to, but all of these you can find, see the risk reward profiles, etc. Of these ETFs in our ETF Google Sheet. Again, the ones I added this week that I think you might find interesting. This is on Europe, aerospace and defense. So after the tiff with Trump and Zelensky, Zelensky went to Europe. You hear the Germans are now increasing their defense spending. So I wanted to see if there was an ETF where we could trade European aerospace and defense. So you can see this EUAD. You can see it's already run way up, hasn't been around very long, but you can see that skyrocket in EUAD, again, increase in the European aerospace and defense. You can see the constituents, again, Airbus, Rolls-Royce, BAE, and just a very quick note as well. And I'll try to come back to this one next week, and we'll do a further analysis on the risk reward profile, etc. Probably. But I would also want to point out that the NATO and the Europe's refocusing and the risk of tariffs with the EU. They're focused on European countries. If they're going to get airplanes from Airbus and engines from Rolls-Royce, think about some US companies that might be hurt by that. Also, Leonardo is a defense contractor, competes with Lockheed, L3 Harris, Northrop Grumman, etc. So those companies, Boeing might lose business because it goes to Airbus because they want to buy European for their defense spending. So think about, positive for some of these European countries, potentially negative for those US companies. So let me know what you think of that theme, that potential trade idea. Also, I was thinking about New Zealand. So we added one for New Zealand, ENZL. So again, we'll probably take a look at that in more detail next week if we have time. Finally, again, we've got a number of additional single stock, etc., golds, meta, etc. And again, we'll take a look at those. Here's one to another one to long, the Mag 7, etc. And I know the Crow's in touch with a number of the single stock ETF companies. So he has some additional ones, probably already put those in the chat. And Crow, if you want to put those additions in the comments to this video or in our Discord, eventually we can add those as well to our ETFs Google Sheet, get more leveraged ETFs on single stocks, additional themes. Also, Crow, if any of your buddies that do the ETFs are interested in sponsoring us, we sure could use it and would greatly appreciate that. And we can always highlight some of their new ETFs in our live streams and videos, etc. So, and Aura Alp is talking about Israel. We have talked about Israel in the past, and we do have some ETFs in our research sheet you can see for Israel. Maybe Middle East. So again, if you have an idea for other areas, shown you a number of different ways you can find ETFs and potential stocks to trade those themes. So I hope that all helps. Okay, I'm running a little long again today. I hope that all helps. Please let me know what you think of all these tools and resources and trade ideas. Do you trade international markets, trade emerging markets? Do you have a particular country that you think is going to be a good trade, long or short, based on tariffs, based on other global events? In my humble opinion, I think trading international markets is going to be the place to look for opportunities in the near future, given all the tariff turmoil, the March Madness in the markets due to tariffs, global tensions, etc. So I hope that all helps. Again, we hope you like this content. Please smash the like button on our videos to help us try to get the YouTube algorithm to show us some love someday and share our content with more traders around the world, continue to grow our BeachBum trading community. Also, we need your feedback on what we can do to improve our weekly trading game plans, our videos, tools, Google Sheets, resources, community, etc. We'd also really love and need your help to repost our content to your fellow traders, repost on your social media sites, invite other traders to join us in our chats and our Discord, etc. So for the mutual benefit of all of our fellow BeachBum traders. So again, love to hear your feedback in the comments in our Discord, what you think of all this, other trade opportunities. And we hope to see you all again 10 a.m. tomorrow, Sundays. Don't forget to set your clocks forward, spring forward tonight so you don't miss us at 10 a.m. Eastern Time for part 2 of our weekly trading game plan for this trading week. We'll take all these ideas and market analysis, and we'll be selecting our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. We'll also talk about how we can use dividend payers and several option strategies to make money trading, generate income while we wait for our swing trading stocks to set up. Again, thank you to everyone that participated in the chat today, everyone watching after the fact. We hope to see you again 10 a.m. tomorrow for part 2. Thank you again and have a great day.